Welcome to the Rick Helps Real Estate Show. We're going to look at the spring market that wasn't or isn't. There was a lot of anticipation. It's like this every year. First of the year, everybody gets very optimistic. I'm going to list my house and put it out there. This year it was an election, so we're going to have a new president. Let's go, go, go. Or, gee, we're going to have more anxiety. Let's wait. And that's what's happening. So the optimism is spring is here. We always have a spring market. Things are going to get better. And then the rates went up and it just went foot. So I got a bunch of numbers here I'm going to share with you, including a Zillow revision, and they revise several times a year. So you just kind of have to take that with a grain of salt. But it's the Crawford Report that's got some very interesting stuff here. Like for now, it says for the monthly period ending April 15th, we're currently recording $1 per square foot of $305, which is substantially down 2.8% from the 314.81 we measured for March 15th. Now, that's almost 3% 1 month. That's pretty big. So we currently forecast a fall, but the scale of decline, or we correctly forecasted a fall is what they're saying, but the scale of decline is far larger than we anticipated. This is opposite of what happened last month, and we fear we've seen significant reversal in pricing direction that should be taken very seriously. Now, fear. There's no such thing as a good market or a bad market in real estate. It all depends on what side of the fence you're on. Fear, if you are selling and you're seeing prices starting to come down at a pretty good clip, then yeah, that's an area of concern. If you're a buyer now, and you've been waiting, when you see numbers like this, it actually makes you wait even more. It makes you re-up your lease. You're going, okay, this is the beginning. I'm going to wait this out. And that's what we're seeing in the market. And so, whether or not it's something to be taken seriously is absolutely true. The trend is the trend until it's our friend. The median sales price confirms this change has moved down over the past month from 465 to 450, an unusually severe monthly decline of 3.2%. This average has stayed stubbornly high, and only in the last 2 weeks has it shown significant weakness. And that's what I was seeing, my friends, in my 7-day moving average, was that new listings did pop up. And now they have gone way down as far as new contracts, down to about 33,000 from 3,400. Now this week, Easter, expect both numbers just to dip, probably quite a bit. Nobody's going out Easter Sunday and looking for a house. There's few, but the number's going to be down. Maybe we'll end up like 2,900 instead of 3,000. But that's what we're seeing in our market. Now Zillow came out. Let me see if I can get this for you here. And normally I have it all teed up, but I didn't. But here's Zillow's forecast. And I'll boom this up just a little bit here for you. Wrong screen. I am bumbling this morning. Zillow forecast for metro level home price change between March 25 and March 26 from this year, last year. We're right here. They're saying we're going to be down 1.5% year over year. What say you? Because I think that's way off. Now, I was forecasting for this quarter that we were going to see the first decline in a long time, while everybody was saying that this is going to be a powerful first quarter and that we were going to have rates that were really dipping and they were going to be maybe even in the fives. And we were going to have, remember, 4 to 6 rate cuts. 4 didn't happen. They went the opposite direction. So as I was looking at the first 13 weeks, I said, I don't know. I think we're going to see our first decline. And well, folks, here we are. And our first decline is almost 3%. Now you got Zillow saying between now and next year, we're going to be down 1.8, 1.5, they're saying. I do not agree. Now, Fannie Mae is actually predicting we're going to be up 4. So you can drive yourself nuts looking at all these numbers. There's going to be all kinds of different forecasts coming on between now and the end of the year. And December is always what I call forecast season. But now here's an interesting article here out of a survey from Redfin that says 24% of Americans are scrapping plans to make a major purchase like a home or car due to tariffs. Nearly 1 in 4 residents are canceling plans to make major purchases of buying a home or car because of President Trump's tariff policies, according to Redfin survey. 55% of respondents less likely to make a major purchase this year, including 39% that are much less likely. More than a third of people do not have an emergency fund to cover mortgage or rent payments in the event of a personal financial crisis, like losing their job. So a lot of anxiety out there, and people saying, I'm going to wait. Now, the tariffs haven't hit anything yet, except a lot of ongoing negotiations. But again, it's the uncertainty in the market that makes people sit on their hands. That's what we're seeing in the bond market. The bond market's reacting as if tariffs are going to create a lot of inflation. And so they're reacting accordingly. They're listening to what Chairman Powell is saying. And Chairman Powell, the central bank, is saying, we're going to have to watch this. We think it means this. We're going to watch. We're not making any move until we can confirm things with the numbers. So here we sit, here we wait. The only thing that we can't wait on is the fact that our ages are changing. Here's our population in U.S. population by age in 2024. And you can see down here, here's 70 years old. Let's compare it to 15 years ago. 15 years ago, if we look at, let's say 65 right here, there were 2.5 million, it says there. And then you go up now, 15 years later, and we're over 4 million. So the population is aging. So these are what we're going to call the baby boomers right here. Now, for those of us waiting for, I don't want to say those of us, those of you waiting for baby boomers to move out so that the next wave of buyers can move in. This last move took 15 years. So you're going to wait another 15 years? That's just one component in real estate, but it's an interesting one. This group right here wants to buy. They want to buy really bad. They want a house. They want to form families. They want what's called household formation. And this group right here, which is the baby boomers, are, rather than selling and downsizing, are sitting there going, well, yeah, the house is bigger than what I'd like, but gosh, I got a 3.5% mortgage, or the house just about paid off. Let's stick around. I'm going to age in place. And so it's a dilemma that I don't care where rates are going or what's going on with the inventory. We're probably going to be here, for a while. We will see some relief in prices going into the summer. I think summer is going to be very weak here in the Valley. And I think for those people that are waiting for prices to come down, not a crash. And I define a crash by like 30 to 40%, like we saw in 2008. Those come along about every 70 years. So it hasn't been 70 years since 2008. So I don't see that coming again. Some of you do. That's okay. We can agree to disagree. But these numbers are not indicating a crash. It's just saying that we've got this gradual softening coming down. But the month of March was a little more severe than what people thought. Even when we look at our Crawford Market Index by cities here, boy, Gilbert took a beating, down 8%. Avondale down 10%, but they're still good. Anything under 100 is considered a buyer's market. Actually, under 90 considered a buyer's market. And look at Maricopa down here at 51, Buckeye at 53.4, Queen Creek 62. I can never say that word, Queen Creek. I always want to call it Queen Creek. Surprise 65.8. They went up just a little bit. But again, it's showing that things are sliding in the opposite direction of appreciation. And here is the same information, but it's on a chart basis. That's the coal total index going down 79.7. These are forward-looking indicators when you measure supply and demand. So this is telling you, it's actually shouting from the rooftop that you cannot expect prices to go up. One of the things that we're seeing is this. This is the change in monthly price per square foot listings. I'm going to blow this up a little bit here if I can. And this is where I think the problem is. And that is, if you look at the 500 to 600,000 range, they're pricing 0.9% higher than last month. Now, folks, what did I just show you that happened in March? Was that a higher number? When we looked at March numbers, was that a lower number? It was a lower number. So why are people pricing higher? Look at 400 to 450, up 1.5. They're pricing above the market, folks. If we take a look at here, change in annual sales price per square foot by listing price range. Is people listing their homes. How much higher is their list price this year versus last year? The other one I showed you was a month. Take a look at this. I think there's a huge disconnect here. 500 to 600,000, up 1.7, up 1.7. Now, let's be candid and real here for a moment. If you're talking about listing your home, if you've been in there a few years, we just experienced a 40 to 50% increase in equity in the value of your home in the past 2 years. What difference does it make if you got to shave off 3% to get your house sold on today's market? Because if you're pricing at 1.7% higher than last year, you're missing it. You're going to sit there. You're going to see days on market. Shave off a few percent. Yeah, it's always nice to get everything, but sometimes you can't. This is a competitive market. Had a show with Caitlin McCaig just the other day, and one of the things that she was saying, which I agree with, she said she presented, she had a listing, and a buyer, gave them an offer, and then they requested some repairs, and the seller said no to the majority of the repairs, and the buyer said, "See ya, I got my eyes on another house." That's today's market, folks. We don't get to fold our arms and say, "Well, I'm not going to negotiate. I'm going to get my price." You will be shooting yourselves in the foot. And now that's not a bad market. That's a normal market that we haven't experienced in a long, long time. When you have CMI sitting there around 100, it's a normal market. And so you can expect that your buyers are looking at your house and they saw 5 more that same day. And they know what the house is going for down the street. They know the condition that it's in, whether it's better than your house or worse than your house. You need to educate yourself as much as you can as a seller. We also talked about the Zestimate. Zillow gives you an estimate on your home. You're going to list your home. You're looking at Zillow and going, they're saying it's worth $625. Well, Zillow doesn't really know your neighborhood. You might be right next to Arcadia, and Arcadia pulls your number up where it really shouldn't. And so you need an agent to sit down there with you, and you guys look at the numbers and openly discuss it. Do not depend on a computer algorithm to set the value for your home. It's a good start, gives you a rough ballpark estimate, but some people get married to that. Zillow says, Redfin says, Realtor.com says, and they grab that. But you have to understand how it's calculated. It's calculated by pulling data off of the county records and taking a look at what's sold in your neighborhood. And that is history. You got to be forward looking. You got to look now and go, well, our inventory is climbing. The rate of appreciation is actually on the downside now. The measurements between supply and demand on the Crawford are forward looking and saying that it's going to get worse going into summer. Maybe I shouldn't price at the peak of the market. So if you need help with that, reach out to us on our team and we can give you a rough idea where your house is. You want a real detailed analysis, we can either do that for you online or we can come over and sit down and talk to you. But I just encouraging sellers, make sure you understand your number. Just a lot of people, almost 40% of sellers this year just threw a number out there. Well, let's see what happens. If I don't sell it, I'll take it off the market. And that's what we're experiencing. Now, I don't pretend to know where things are going to go in a year, but I honestly think I can sit here very confidently right now and say it's going to be a tough summer for sellers. I don't see any reason why rates are going to come flying down. I don't see any reason why sales are going to climb up, and inventory is really kind of a crapshoot. It's climbing up now. Will it start to decline a little bit? Because some people are going to give up and take their homes off the market. I'm still kind of waiting for that. I haven't seen it yet. I thought it was going to happen April 1st. It didn't. And I think we could see some of that, but it may be offset by people just saying, oh my gosh, prices are going down. We better list now. And I think you'll see a lot of that. But none of this spells out a brisk summer for sellers. None of it, but depending on the area, spells out a bargain season for buyers. So I think buyers are going to sit back and go, okay, this is the beginning. And it may not be. It may just be a temporary thing. You get down to the end of summer and things turn around, start to even out a little bit. Prices flatten out. I can't predict past the summer, but I'm here to tell you, summer, if you're selling, it's going to be a slow one, folks. If you have any questions, shoot me an email at rick@rickhelps.com. And if you haven't signed up for my newsletter yet, please do so. The link is down below. It comes out every Monday morning at 7 o'clock. I go over numbers just like I show you here. It's very mobile friendly. I think you'll be glad you signed up. Everybody, I hope you had a great Easter. Take care. See you on the flip side.